When it comes to IRS audits, there are a lot of myths and misconceptions out there. So we at the Taxpayer Advocate Service want to make sure you understand the basics of what happens if the IRS audits your return and what taxpayer rights you have. So what is an IRS audit? An audit is an examination of your tax return to verify you've reported your income, credits, and deductions correctly. If the IRS selects your return for audit, it doesn't necessarily mean there is a problem or that you've done something wrong. Why is the IRS auditing my return? The IRS sometimes randomly selects returns for audit. Other times it selects returns based on items reported or not reported on your tax return. How does the audit process work? If the IRS audits you, the process begins with the IRS sending you a letter with the instructions and contact information of the auditor. Beware of scams. The IRS will never call, email, or text you to inform you of an audit. The most common type of audit is a correspondence audit. This is where you mail the IRS the necessary documentation about the questioned items on your tax return. An office audit is where you meet with the IRS agent at the local IRS office to go over your return in more detail. And finally, a field audit is more comprehensive and is usually conducted in a home, an accountant's office, or at a business. These audits are usually reserved for more complex cases. So how far back can the IRS look with an audit? Usually, the IRS has 3 years from when you filed the return to audit and propose additional tax. But the audit can go back as far as 6 years for substantial errors. If the IRS believes your return is false or fraudulent, the IRS has an unlimited amount of time to audit your return and propose additional tax. How long does an audit take? The time it takes for an audit varies based on the type of audit, the complexity of the issues, and how quickly you provide the requested documents. So what are the possible outcomes? After the audit, the IRS will provide its findings with 3 possible outcomes. 1. No change. If the IRS finds your return to be accurate after you send the requested documents, it will close the audit without making changes. 2. If the IRS finds discrepancies, it will provide you with an audit report explaining the changes to your tax return. If you agree with the changes, you'll sign the report and pay any additional amount you owe, or make a payment arrangement with the IRS. However, if you disagree and have additional documentation that supports your claim, you may send that in and request an audit reconsideration so long as you haven't paid the amount you owe. If you have paid the amount and still wish to dispute it with the IRS, you will need to file a claim for refund and possibly a refund suit in court. And finally, if the IRS finds you've overpaid based on your documentation, then you will receive a refund, plus any applicable interest. So visit TAS's website, www.taxpayeradvocate.irs.gov, for more information about your taxpayer rights and IRS audits. The website also covers a variety of tax-related concepts and problems, breaking each down to describe what taxpayers should know, what they should do, and where they can get more help if needed. Taxpayer Advocate Service, your voice at the IRS.